Hey everyone, and welcome back. Ready for another deep dive with us?
Always.
Awesome. So this time we're going to be tackling some economic trends and predictions.
Yeah.
Because honestly, who isn't at least a little curious about where the economy is heading next year and beyond, right?
Right.
We've got some really cool sources this time around.
Yeah.
A mix of like fresh market data, some interesting commentary from Bank of America,
Mm-hmm.
and even some like real world retail observations. We're out and about.
Yeah. Gotta love those real-world observations.
Yeah, just trying to kind of put the pieces together.
Totally. And understanding those pieces can be really valuable, whether
Sure.
you're an investor making business decisions or just someone who likes to kind of stay ahead of the curve.
Yeah, we're going to make sure that you walk away from this feeling informed
Yes.
and not overwhelmed.
Absolutely.
So to kick things off, we've got some pretty intriguing Black Friday insights.
Okay. Love it.
So, all those doorbuster deals that get people lining up, before the sun even rises.
Mhm.
Well, for some retailers, Black Friday isn't just a sale, it's like a lifeline.
Right.
I mean, companies like Bed Bath & Beyond, Bath & Body Works, Ulta,
Mm-hmm.
they're making like a third of their yearly revenue during the holiday season.
It's huge. Yeah.
Yeah.
And this dependence on the holiday season, I think, really reveals a lot about the broader retail landscape.
Yep. Interesting.
Like, we're seeing all of these interesting shifts in consumer behavior
Yeah.
and also how retailers are adapting, right?
Mm-hmm.
So, for example, foot traffic patterns on Black Friday were kind of all over the map.
Okay.
Like, we saw Ulta and Best Buy had pretty decent crowds. Dick's Sporting Goods was solid but not spectacular.
Oh, really?
It makes you wonder, are people being more selective about where they're willing to brave those Black Friday crowds?
That's so true.
Yeah.
Yeah.
And then there's the whole online versus in-store debate.
Yeah, right.
It's always a big one.
Yeah.
So MasterCard data shows overall retail sales grew by 3.4% on Black Friday.
Okay.
But wait, there's a little caveat.
Oh, there's always a caveat.
Always. That figure isn't adjusted for inflation.
Oh.
So real growth might be closer to 2.5%
Okay.
when you factor that in.
Wow. Yeah, inflation really is kind of always lurking in the shadows there.
It is.
Yeah, okay, so online sales were up by a pretty healthy 14.6%.
Yeah.
But it sounds like it wasn't quite enough to offset that weaker in-store growth.
And that weaker in-store growth, that's where things get really interesting.
Ooh, okay. Tell me more.
All right, so Sensormatic, another analytics firm, they estimated that in-store sales could actually be down
Oh, wow.
by as much as 8.2%.
Wow. That is a pretty big difference from what MasterCard is reporting.
It is a big difference.
What does that tell us?
Well, maybe it tells us that we're seeing an even more pronounced shift
Okay.
towards online shopping than we initially thought.
Interesting. Okay.
Or it could be that certain types of retailers are really feeling the pinch,
Right, yeah.
more than others.
Okay, that makes sense.
Yeah.
It's really a puzzle, isn't it?
It is a puzzle for sure. And, we can't forget about this whole buy now, pay later trend.
Oh, yeah, that's true.
So BNPL purchases made up about 6.4% of Black Friday sales.
Oh.
Does that signal potential financial distress, among consumers?
Yeah. Is that like a warning sign, maybe?
It's a valid question.
Okay.
I mean, at that level, I think it's more likely reflecting just evolving payment preferences and the accessibility of these financing options.
Yeah.
However,
Yeah.
it is definitely something to keep an eye on.
Okay.
If that number keeps rising significantly,
Yeah.
it could indeed be a sign that, consumers are stretching their budgets a little too thin.
Okay, so we've got this mixed bag of Black Friday data,
We do?
but there is a much bigger economic indicator on the horizon,
Oh, yeah,
the Friday unemployment report.
that's right.
This one has everyone on edge.
And with good reason,
Yeah.
The jobs report is kind of a critical gauge
Uh-huh.
of the economy's health. And right now we're expecting to see about 200,000 new jobs,
Okay.
which would signal, a return to growth.
Right.
The unemployment rate might also tick down a bit from its current level of 4.1%.
Okay.
But here's the catch.
Uh.
We're seeing very limited payroll growth, despite a ton of open positions.
Oh, that's interesting.
It's a real head-scratcher.
Yeah, it's
Why aren't those positions being filled?
right. And it's interesting, too, because even the auto industry is sending these kind of mixed signals.
Oh, really? How so?
Like, Tesla is now offering immediate delivery deals, even on the Cybertruck.
Oh, wow.
Doesn't that suggest that demand might be softening a bit?
That's a great observation, and it could be a bit of a canary in the coal mine.
Uh-oh.
If demand for these big ticket items like cars starts waning,
Yeah.
it could point to some broader economic concerns.
Oh,
And even, potential layoffs down the line.
oh gosh, I didn't even think about that.
Yeah, so this upcoming jobs report might give us a little more insight into whether October's dismal numbers were just a blip
No,
or, part of a larger trend.
right.
Remember, we actually saw private payrolls decline
Hmm.
by 29,000 jobs that month.
Right.
The overall growth of 14,000 was only due to an increase in government jobs.
Yeah, so
Yeah.
I'll admit I'm always a little skeptical of these month-to-month job reports.
I get it.
They can be so volatile,
Ow.
and they often get revised later.
Right? That's true.
But you can't deny the anticipation is definitely building.
For sure, especially with Federal Reserve officials Powell and Waller set to speak on Monday.
Oh, yeah, that's right.
Their comments will definitely add fuel to the fire.
Okay, so speaking of predictions and things that could really move the markets,
Yeah.
we have to talk about Bank of America's outlook for 2025.
All right, let's hear it.
They're actually calling for a U.S. economic boom.
Wow, a boom. That's pretty optimistic.
Right. A bit unexpected, wouldn't you say?
Yeah, especially compared to some of the more cautious global forecasts we've been seeing.
Right, exactly.
So what's behind Bank of America's bullish stance?
Well, they believe that 4 key themes from 2024 will reverse in 2025.
Okay, I'm intrigued. Lay it on me.
All right, so first up, they think that global swing towards conservatism and populism will lose steam.
Oh, interesting. So politics might actually play a role in this economic boom.
Things are getting juicy right.
All right, what's the next theme they see reversing?
All right, so we kind of laid the groundwork there with some of those big Bank of America predictions.
Yeah.
But let's zoom back in for a second on those Black Friday observations.
Okay.
I know we touched on the big picture, but I keep coming back to this idea of like how some companies rely so heavily on the holiday season.
Yeah.
It really is make or break time for them, isn't it?
It is. Think about it. Companies like Bed Bath & Beyond, Bath & Body Works, Ulta,
Right.
they're aiming to capture like a huge chunk of their annual revenue
Yeah.
in just a few weeks.
Crazy.
And that puts a ton of pressure on them to get their strategies right.
Absolutely. So it makes understanding consumer behavior during this period even more crucial, right?
Easily.
Like, are people holding back on spending? Are they out there hunting for bargains?
Yeah, are they shifting more towards online shopping?
Right. What's the story?
Well, the data we have paints a pretty complex picture.
Okay.
So MasterCard reported a 3.4% increase in overall retail sales for Black Friday,
Okay.
which, on the surface sounds pretty good, right?
Yeah.
But remember, that figure isn't adjusted for inflation.
Oh, right, right.
So the real growth is probably closer to 2.5%
Okay.
when you factor that in.
Yeah, inflation is sneaky like that.
It really is always lurking in the background.
Yeah. Okay, so then we have Sensormatics data,
Right.
which estimates that in-store sales could actually be down by as much as 8.2%.
Yeah, that's a pretty stark contrast to those MasterCard numbers.
It is. It really suggests that the retail landscape is kind of becoming increasingly fragmented, doesn't it?
It does.
Like some companies are thriving, while others are really struggling to keep pace.
Yeah, and that divergence could be due to a bunch of different factors.
Oh, yeah, like what?
Well, everything from, their product mix and their pricing strategies
Right.
to their online presence and how well they're engaging with customers.
It's like a real-time experiment in retail adaptation, isn't it?
It is.
And speaking of adaptation, it's interesting to think about how different income levels might be approaching their holiday shopping.
Oh, yeah. How so?
Well, the research we looked at mentioned that shoppers for higher-end brands like Williams-Sonoma
Okay.
might have already done a lot of their shopping online in the weeks leading up to Black Friday.
That's interesting.
Yeah, it could be that affluent consumers are less influenced by that traditional Black Friday frenzy.
Okay.
They're probably more likely to spread out their spending over a longer period of time, and they're definitely more comfortable shopping online.
Right. They're probably less worried about, snagging the absolute lowest price
Yeah,
and more focused on, convenience and a more curated shopping experience.
totally. Okay, so let's shift gears a little bit
Right.
and talk about that jobs report.
Yes, the jobs report.
We know it's coming up on Friday,
Mm.
and there's a lot of uncertainty swirling around it.
Yeah. We kind of have to consider the context of October's surprisingly weak report.
Oh, right.
Remember, private payrolls actually declined
Yeah,
by 29,000 jobs?
that was a shocker.
Yeah, and the overall growth of 14,000 was only due to an increase in government jobs.
So is this a blip, or is it a sign of like a broader slowdown in hiring? What do you think?
Well, that's the million-dollar question, isn't it?
Yeah.
That's what everyone will be trying to figure out
Right.
from Friday's report. I mean,
Yeah.
if we see another weak number, it could definitely raise concerns about the strength of the labor market
Right.
and potentially dampen investor sentiment.
Okay. But a strong report, on the other hand, could signal that, the economy is still in good shape.
Yeah, exactly. It could ease some of those fears.
Okay. And of course, we can't forget about the Fed.
The Fed is always watching.
They're going to be watching this report very closely
Oh, yeah, for sure.
because it could influence their decisions about interest rates.
Right. A strong jobs report might give them more leeway to raise rates,
Okay.
while a weak report might encourage them to hold steady or even consider lowering them.
So they're walking a tightrope.
They are. They're trying to balance controlling inflation with supporting economic growth.
That's a tough job.
It is, and this jobs report will be a key data point for them.
For sure.
Yeah.
Speaking of the Fed, it's interesting to note that Bloomberg reported a high level of bullishness among investors.
Really?
Yeah, like 57% believe the market will increase next year.
Huh, that's pretty high.
It is. It's actually the highest level since 1987.
Wow. Sometimes that extreme bullishness,
Yeah.
it can be a bit of a contrarian indicator.
Oh, interesting.
Yeah, it's worth remembering that markets tend to move in cycles, and periods of euphoria are often followed by periods of correction or decline.
Right. So maybe a little bit of healthy skepticism is warranted.
Always good to have a healthy dose of skepticism.
Okay, so before we circle back to those Bank of America predictions,
Yeah.
there's one more observation from the source material that I wanted to touch on.
Okay, what is it?
It's about JP Morgan opting out of transition finance.
Oh, yeah, that was a pretty big development.
It was. They're essentially saying that they won't participate in efforts to decarbonize the economy.
Right, which seems like a significant move.
It does,
Yeah.
especially given all the focus on ESG investing and the push for companies to address climate change.
Yeah, I'm curious to hear your take on this. What do you make of JP Morgan's decision?
Well, it's hard to say for sure what the long-term implications will be.
Great.
It could signal a broader backlash against those ESG mandates,
Okay.
or it could just be an outlier.
Yeah. We'll have to see how other financial institutions respond.
Totally. It makes you wonder if this marks a turning point
Yeah.
in the whole debate over sustainable investing.
It's a complex issue with no easy answers.
It really is.
Yeah.
But it just highlights the importance of paying attention to these trends
Absolutely.
and how they might shape the future of investing.
Now, I believe we were going to delve a little deeper into those Bank of America predictions for 2025.
Yes.
We talked about their belief that the global shift towards conservatism and populism will kind of lose momentum. But they also had some interesting thoughts about bonds.
Yes. Let's get into that. They believe that 2025 could be a good year for bonds,
Yeah.
especially if yields approach 5%.
They did. They even suggested that investors should back up the truck if that happens.
They did. It's a pretty colorful way of saying that they see a buying opportunity.
It is. They believe that bonds have been undervalued
Okay.
and that a rebound is likely.
Interesting.
Of course, interest rates are still a major factor to consider.
Right.
If the Fed continues to raise rates, it could put downward pressure on bond prices.
But if rates stabilize or even start to decline, then bonds could become a really attractive investment.
Exactly. It all comes down to timing and assessing that overall economic environment.
Okay, so beyond bonds, Bank of America also made some predictions about the tech sector.
Right, specifically regarding the Magnificent Seven.
Yeah, they don't seem to believe that their dominance will continue.
No trend lasts forever, right?
Right. And it's worth noting that they specifically mentioned Symbotic,
Oh, yeah, Symbiotic.
which is a warehouse automation company, as a potential player to watch.
Interesting.
So it seems like they see opportunities in those sectors that are benefiting from technological advancements,
Yeah.
but haven't quite reached the same level of market saturation as the big tech firms.
Right. It's a good reminder to keep an eye out for those emerging trends
Total.
and companies that are poised for growth.
You never know where the next big opportunity might come from.
All right, so that brings us to the fourth and final theme, China.
Ah, yes, China.
Bank of America believes that China could experience a resurgence in 2025,
Okay.
potentially making Chinese stocks a good hedge.
That one seems a little more debatable. I mean, China's economy has been facing some serious challenges,
Yeah.
and there's a lot of uncertainty surrounding their future growth.
It's difficult to predict how China's economy will perform in the coming years,
Right.
especially given those geopolitical tensions and that ongoing trade war with the U.S.
And then there's the whole question of consumer confidence.
Oh, yeah, one.
Even if the Chinese government implements policies to stimulate growth, will consumers actually respond by spending more?
Right. Or will they remain cautious?
It's a valid concern.
It is, consumer behavior is a crucial driver of economic growth.
Yeah,
And if Chinese consumers aren't confident about the future,
right.
it could really limit the country's recovery.
Okay, so we've explored Bank of America's predictions
Yeah, we've covered a lot of ground.
about political shifts, bonds, the tech landscape, and China's potential resurgence.
We have.
But the prediction that really kind of grabbed our attention
Yeah.
was their advice to go long the U.S. boom, short the global bust
Right.
in the first quarter of 2025.
It's a bold statement.
It's basically recommending a two-pronged approach,
Yeah.
betting on the U.S. market to thrive, while also betting on a decline in global markets.
And as we talked about earlier, this isn't a static strategy.
Right.
They suggest adjusting your approach in the second quarter, maybe
Right.
selling off some of those tech stocks and buying treasuries if yields hit 5%.
And they even mention looking at Chinese stocks and maybe even crypto as a hedge.
It's a dynamic and potentially aggressive strategy.
It is.
But before we get too deep into the weeds of how this might actually work in practice and,
Yeah.
all the potential risks and rewards, I think it's important to step back for a second
Okay.
and remember why we're even having this conversation.
Yeah, good point.
Yeah,
It's easy to get caught up in all the numbers and predictions.
it is.
But our goal here is to help you, the listener, make sense of all of these complex economic forces
Exactly.
and how they might impact your life, your decisions, and your future.
So as we move into the final part of our deep dive, let's shift our focus to you.
Okay.
Given everything we've discussed,
Yeah.
what part of the economy are you most interested in learning more about?
What questions are still lingering in your mind? We've really covered a lot of ground in this deep dive,
We have from Black Friday trends to that jobs report and, of course, those Bank of America predictions.
Yeah, and we've really tried to paint a clear picture of the economic landscape.
Definitely the booms, the busts, and everything in between.
Exactly. But before we wrap up, I think we need to revisit Bank of America's advice to go long the U.S. boom, short the global bust.
Right in the first quarter of 2025?
Yeah, that was a strategy that really caught our attention.
It did. It's a bold prediction for sure.
It is.
They're essentially predicting a global recession in that first quarter,
Right.
which could lead to lower prices internationally, but higher prices here in the U.S.
Right.
And their advice is to ride that wave.
Right.
Invest in things that will benefit from a strong U.S. economy while also betting on a decline in global markets.
So it's like this two-pronged approach, this balancing act.
Yeah, and then if that wasn't enough to keep track of,
Right.
they suggest shifting gears in the second quarter,
Yeah.
selling off those Magnificent Seven tech stocks, buying treasuries, if yields hit 5%, and even considering things like Chinese stocks or even crypto as a hedge.
They really paint a dynamic picture.
They do, but before anyone rushes off to, rebalance their portfolio,
Right.
we need to inject a healthy dose of reality.
Yeah.
These are predictions, not guarantees.
Exactly. And I think that's a crucial takeaway from this deep dive.
For sure.
We've explored all this data, these expert opinions, all these market trends, but ultimately you have to make the decisions that are right for you.
Absolutely. No matter how compelling a prediction may seem,
Yeah.
it's so important to do your own research, consider your risk tolerance, and, maybe even talk to a financial advisor.
Yes, definitely get that professional advice.
Before making any major moves.
And while we're on the topic of, making those informed decisions,
Yeah.
don't forget about the power of diversification.
Oh, absolutely. Diversify. Diversify. Diversify.
Right. Don't put all your eggs in one basket.
Exactly. Spread your investments across different asset classes, different sectors, different regions.
Yeah. It's a great way to kind of manage that risk and hopefully enhance your returns over time.
You got it.
So as we wrap up this deep dive, I want to leave you with one final thought.
Okay.
This economic landscape, it's constantly changing,
Always.
full of surprises, challenges, opportunities.
Is.
And the best way to navigate it is to stay informed, stay curious, and keep asking questions.
Well said. We've given everyone a lot to think about today.
We have.
But the conversation doesn't have to end here.
No, it doesn't.
What are you curious about? What questions are still lingering?
Yeah, let us know in the comments.
We might even explore those topics in a future episode.
That's right. We love hearing from you
We do.
and diving deep into the topics that matter most.
Absolutely.
So until next time,
Yeah.
keep exploring, keep learning, and keep diving deep.
See y'all next time.